It all comes down to one deal. One moment. The kind of deal that redefines a person's life. For Len Blavatnik, that moment stretched over a decade, but it had a clear, explosive endpoint. It was a Russian oil deal. A venture called TNK-BP. Think of it as a joint venture between a group of Russian oligarchs and the British oil giant BP. Blavatnik was one of those oligarchs. He and his partners had cobbled together a messy, sprawling collection of Russian oil assets. It was immensely valuable. They needed Western expertise. They needed capital. BP had both. The marriage was announced in 2003. It was a monster. It was complicated. It was brilliant. The partnership was never smooth. It was a clash of cultures, a clash of wills. Boardroom fights were legendary. The Russians wanted more control. The British wanted more transparency. The drama played out in the press, in the courts, behind closed doors in Moscow, behind closed doors in London. But while the titans fought, the wells kept pumping. Oil prices soared. The cash flowed like a river. Blavatnik and his partners were collecting enormous dividends. They were learning how a global supermajor operated. They were waiting. They knew that a partnership this volatile couldn't last forever. The end game was always about the exit, the big sale. The end came in 2013. The state-owned Russian oil behemoth, Rosneft, decided it wanted the whole thing. It wanted TNK-BP, all of it. So it made an offer. A massive, eye-watering offer of $55 billion. Blavatnik's share of the sale was a reported $7 billion. In cash. Think about that. $7 billion. Dropped into your bank account. It wasn't the beginning of his wealth, not by a long shot. But it was the rocket fuel. It was the capital that transformed him from a very rich man into a global mega player, free to hunt for any asset in any industry, anywhere in the world. It was the score of a lifetime. This one transaction provided the liquidity and the firepower for everything that came next. It was the ultimate example of a core principle. Buy into a complex, undervalued situation, ride it through the chaos, and then sell when a strategic buyer with a huge checkbook comes knocking. The Russian oil fields were the source, but the cash from their sale would soon be flowing into Hollywood film studios, British streaming services, New York real estate. The TNK-BP deal wasn't just a win, it was the pivot point for an entire empire. It was the foundation upon which everything else was built, a gusher of capital that would never run dry. It was the score of a lifetime. To understand the moves, you have to understand the man. And to understand the man, you have to go back to the beginning. Len Blavatnik was born in Odessa, Ukraine, in 1957. This was the Soviet Union. A world away from Wall Street and corporate boardrooms. It was a system where private enterprise was a crime. Where your path was largely set for you. He was a bright student studying at the Moscow Institute of Transport Engineers. But he saw the walls of that system. He saw the limits. He knew his future was not there. So he did what millions of ambitious people did before him. He left. In 1978, at the age of 21, he immigrated to the United States with his family. The move was a complete reset. He landed in a new country, with a new language and a new system to learn. He enrolled at Columbia University, studying computer science. This wasn't a casual pursuit. It was about learning the language of the new economy. He was building the tools he would need later. He was absorbing the culture of American capitalism from the ground up. He wasn't born into it. He had to master it. This outsider's perspective would become one of his greatest assets, allowing him to see opportunities that insiders often missed. After Columbia, he didn't jump straight into the deal-making world. He took another crucial step. He went to Harvard Business School. He graduated with his MBA in 1989. HBS is a system. It's a network. It's where you learn how the game is played at the highest levels. You learn the language, the etiquette, and the mindset. Access Industries is not a typical private equity firm. It doesn't just buy/costs, flip. The playbook is more patient, more strategic. It's built on a foundation of what Blavatnik calls long-term value creation. Find industries undergoing fundamental change. Buy assets that are misunderstood or undermanaged. Use capital and strategic oversight to grow them. It's a hunt for complexity. Where others see chaos and risk, Access sees opportunity. The firm seeks out situations that scare away conventional investors. The first phase of his career was dominated by the post-Soviet world. He understood it. He spoke the language. He knew the people. Westerners saw Russia in the 1990s as a wild west of corruption and instability. Blavatnik saw a historic fire sale, state-owned assets and chemicals, aluminum, oil. He formed partnerships with local entrepreneurs like Victor Vekselberg. They navigated chaotic legal and political terrain to consolidate assets. They built conglomerates like Swal. Swal later became part of UC Rusal, one of the world's largest aluminum producers. This was high-stakes, high-risk investing that demanded nerves of steel. After the massive TNK-BP cash-out, the playbook evolved. The focus shifted to global media, technology, entertainment. The underlying logic stayed the same. Find an industry in turmoil. The music industry was a perfect target. In 2011, it was on its knees, decimated by piracy, struggling with digital distribution. Everyone thought it was a dying business. That's when Access Industries bought Warner Music Group for $3.3 billion. They saw what others didn't, the future of streaming. They believed that paid subscriptions would eventually save the industry. They were right. The Warner Music deal is a masterclass in the Access playbook. Buy a classic brand at maximum pessimism. Bring in a new management team, led by Stephen Cooper, known for turnarounds. Don't starve it of cash. Invest in it. Sign new artists. And most importantly, wait. Be patient. Let the industry's transformation play out. Spotify grew. Apple Music grew. They turned Warner's vast catalog of songs into a money-printing machine. Access then took Warner Music public in 2020 at a valuation many times what they paid. It was the same strategy as the Russian oil fields, just applied to pop songs instead of petroleum. Find the value hidden in the noise. So how big is the empire? The numbers are staggering, almost abstract. As of today, October 10, 2025, Len Blavatnik's net worth is consistently estimated to be in the tens of billions of dollars. The exact figure fluctuates with the market. He perennially ranks among the wealthiest individuals on the planet. This isn't just paper wealth tied up in one stock. It's a diversified global portfolio. Wholly owned companies, majority stakes, public equities, prime real estate. A mountain of assets built methodically over 4 decades. The scale is hard to grasp, but the key pieces bring it into focus. The wealth isn't static, it's active. Cash from one exit is redeployed as fuel for the next acquisition. $7 billion from the Rosneft deal wasn't saved. It bought Warner Music Group. It was poured into LyondellBasell after bankruptcy. Another classic Blavatnik play. Buy distressed but solid businesses. It funded the sports streamer DAZN. A bold bet on how people watch live sports. The empire constantly sheds old assets and acquires new ones. The physical footprint matches the financial scale. Through Access Real Estate, he owns iconic hotels and properties. Grand Hotel du Cap Ferrat on the French Riviera, Faena Hotel, Miami Beach, high-end residential and commercial properties in New York, high-end residential and commercial properties in London. This isn't just about owning nice things. Real estate provides stable, long-term value and cash flow, a ballast against riskier bets. It's the solid ground beneath the high-flying ventures. Beyond businesses and buildings, there's philanthropy. The Blavatnik Family Foundation has donated hundreds of millions. Oxford University, Harvard, Stanford, Tel Aviv University. The Tate Modern in London has a wing named the Blavatnik Building. This isn't just charity, it's legacy building on a grand scale. It cements his name and influence in academia and art. His impact is designed to be felt for generations. The scale of the giving mirrors the scale of the earning. There is no secret formula, no magic algorithm. The financial principles behind Blavatnik's success are surprisingly straightforward. They are rules that are easy to understand but difficult to execute. The first and most important rule is to diversify, but not in the way a typical financial advisor would tell you. It's not about buying a basket of mutual funds. It's about diversifying across industries, geographies, asset classes. When Russian commodities were the engine of his wealth, he was already looking at American media. When media became a core holding, he was investing in Israeli technology, European real estate. This protects the empire from a downturn in any single market or sector. The second rule is to think in decades, not quarters. Wall Street is obsessed with quarterly earnings reports. Blavatnik plays a longer game. When Access bought Warner Music in 2011, the company was losing money. The turnaround didn't happen overnight. It took years of investment and patience for the streaming revolution to take hold, and for the company's value to be fully realized. This long-term horizon is a massive competitive advantage. It allows Access to buy assets when they are out of favor, and hold them through cycles of fear and pessimism, until the market finally recognizes their true worth. It's a rejection of short-term thinking. A third critical rule is the intelligent use of leverage and partnerships. Blavatnik rarely goes it alone on the biggest deals. The initial Russian ventures were all done with partners. It spreads the risk. It brings in local expertise. When buying companies like Len Blavatnik or Warner Music, Access used debt financing, a standard private equity tool. But the key is using it wisely. The debt is structured against the asset's ability to generate future cash flow. It's a calculated risk, not a reckless gamble. Good partners reduce the financial burden, and smart financing magnifies the returns when the bet pays off. It's about using other people's money to build your own fortune. Finally, there is the rule of protecting your capital. This might sound counterintuitive for someone who made his name on risky Russian deals, but it's essential. After a big win, like the TNK BP sale, the priority is to preserve that capital. It becomes the dry powder for future deals. This is why a significant portion of the empire is in stable assets like blue-chip real estate and dividend-paying public stocks. These assets may not offer the explosive growth of a venture capital bet, but they provide a solid foundation. They ensure that even if a big, bold new venture fails, the core of the empire remains intact. It's a balance between offense and defense. To understand the empire today, you have to look at the main pillars that support it. These are the crown jewels of Access Industries, a collection of businesses that span the globe and generate billions. They represent the Blavatnik playbook applied over many years. At the very top of the list is Warner Music Group, one of the big three global music companies, a cash-generating powerhouse. It owns rights to a vast music catalog, starting with legends Led Zeppelin, Madonna, and current superstars, Ed Sheeran, Dua Lipa. Every time a song is streamed, a small slice of money flows back to WMG. Every time a song is sold, a small slice of money flows back to WMG. Every time a song is used in a movie, a small slice of money flows back to WMG. It's a business built on royalties, a steady, predictable stream of income. The second pillar is Len Blavatnik Industries, a name many don't know, but its products are everywhere. It's one of the largest plastics companies, chemicals, and refining. The plastic in your car, the food packaging you buy, and many medical devices may come from its plants. Access helped the company emerge from bankruptcy in 2010, investing when others fled. Today it's publicly traded and a cornerstone of the industrial portfolio. Less glamorous than pop music, but fundamental, industrial-scale cash flow. A third, riskier jewel is DAZN Group, pronounced DAZN, a global sports streaming service. The vision: become the Netflix of sports. It has spent billions on live broadcasting rights, especially boxing, soccer, and it's competing across regions: Europe, Asia, North America. It's a massive bet that fans will move from cable to online sports. The company is still burning cash fighting for subscribers and content. A high-risk, high-reward venture. Its outcome will shape the Access story. Finally, a sprawling collection of other assets. Access Entertainment invests in television, film, live theater, including Broadway co-productions. Access Real Estate, luxury hotels, commercial properties. A venture capital arm, investing in tech startups in the US and in Israel. This diverse mix shows the full scope of the strategy. Steady income from music. Industrial might from chemicals. High-growth gamble on sports streaming. A solid foundation of real estate and smaller ventures. Each piece plays a specific role in the overall structure of the empire. So, what is the one lesson? The single, clear takeaway from Len Blavatnik's journey. Wealth is built at the intersection of courage and patience. Courage, patience. It's a simple idea, but it contains the entire playbook. Courage is the willingness to step into situations that others find terrifying. To buy Russian oil assets in the chaotic 1990s. To buy a music company when the entire industry was seen as a sinking ship. To invest billions in a chemical giant emerging from bankruptcy. This is not the courage of a gambler blindly rolling the dice. It is the calculated courage of a player who has done the homework. But courage alone is not enough. Many people make bold bets. Most of them fail. The missing ingredient is patience. The patience to hold those assets for years, sometimes a decade or more. The patience to ignore the noise of the market. The patience to ignore the criticism of the press. The patience to ignore the panic of other investors. The patience to let a strategic plan unfold. The patience to wait for the world to change. The patience to wait for the industry to transform. The patience to wait for the true value to become obvious to everyone. Blavatnik's greatest advantage has been his ability to operate on a different timeline. Think of it as a two-step process. First, you make a brave move based on a long-term thesis that goes against the current consensus. This requires independent thinking and a deep understanding of the fundamentals of an industry. You buy when there is blood in the streets. You buy the asset that nobody else wants. This is the moment of maximum risk, but also maximum potential reward. It's the move that gets you into the game at a price that makes extraordinary returns possible. This first step is about seeing what others don't. It's an act of vision and conviction. The second step is to do almost nothing. You hold, you wait, you let your management team execute the plan. You provide capital and oversight. You resist the temptation to constantly meddle. You resist the temptation to sell at the first sign of a profit. You let the value compound. You wait for the strategic moment, the perfect exit opportunity, like Rosneft coming to buy TNK-BP, or the public markets falling in love with Warner Music again. This is the act of discipline. Courage gets you in the door. Patience is what allows you to walk away with the fortune. That combination, executed again and again, is the simple, powerful lesson behind the Blavatnik empire.